Exit theory number 6, we are going to talk about the logical versus emotional market signals. There are 4 actions we can do in the markets. We can buy, sell, hold, or stay out. A market signal is any data or information that helps us to choose one of those 4 actions. If the market signal cannot help us choose one of the 4 actions, then it is not a valid market signal, so do not use it or do not waste time with it. There are 2 types of market signals that can help us make the right decision. There are logical versus emotional market signals. Let's examine each type of market signal in detail. The logical versus the emotional market signals. Our simple formula for taking profits is this. When we take profits equals our personal financial goals plus the market signals that tell us to take profits. Let's examine the market signals that tell us to take profits portion. The 2 types of market signals we can use to know when to take profits. The logical market signals are the signals that we want to use. These signals are very clear because it has a clear number value on it. It's easier to take action on these signals because it is very black and white and no confusion. We can create a scoring system to guide us in taking consistent actions in a bull market when we use logical market signals. On the other hand, the opposite of logical market signals are emotional market signals. Avoid these signals at all costs. The emotional market signals are based on emotions, feelings, sentiment, etc. of an individual and or the market. It is more difficult to read the emotional market signals because it does not have a clear or precise number that we can review or examine. It requires you to have experience reading or recognizing fear, FOMO, and greed in the markets. So this takes time to gain that experience. When you're a beginning trader or investor, you don't have that experience yet, so it's really hard to rely on emotional market signals to take profits. It's more difficult to take action on these emotional market signals because the signals are very gray and unclear. It's not a tangible number that we can rely on every time. For example, if I say that I feel a fever coming on, or I feel hot, or I feel a fever, or I feel like I have a fever, right? You can measure my body temperature and say that, oh, it's 140 degrees or it's 105 degrees. It's above the normal body temperature. So we know that, Ty has a fever or his body's overheated. But if I just say, I don't feel well, it's really hard to make an assessment or take action on a comment such as, I don't feel well, because there's no tangible number associated with it. So our goal is to look for logical market signals in the market when we are ready to take profits and avoid the emotional market signals. Here's a list of logical market signals. I'm just going to read it out and then we'll go into it in detail. So there's the personal financial goals. There's the angle of the Taifu 30 cryptocurrency market index trend channel. There's the angle of our personal portfolio trend channel. We're going to compare the benefits of the BTC or the USD chart and know when to use them. There's the trading volume. Yes, it can be fake, but it's still an increase. We can look at the market cap. It's significantly above previous bull market highs. The Bitcoin dominance crashes near all-time lows. The daily average true range is greater than 35 degrees. The daily average true range is greater than 3x increase. The increase in amount of scam replies in the popular YouTubers' comments. The promotional emails requests that I get or that people get in their mailbox. And then the USDT markup in countries with capital controls, and then the increase in fake crypto influencer social media accounts. So here's a note, guys. We include over a dozen logical market signals here. In the future, we will update this section with new market signals that are useful. You are also welcome to add additional market signals you find useful as well. Make sure the market signal has a number. If it's not a number, then it's not a logical market signal. Logical market signal number 1 is your personal financial goals. Like we mentioned before, if we need $3 million to quit our day job and retire, do we need to capture 100% of the bull market move? And the answer is no. If there's an opportunity for us to pull $3 million out of the markets, right, we need to go ahead and do that and fulfill our personal financial goals. Reaching our goal can be a signal to take profits in itself. Like, you don't have to wait for any other market signals. I have enough money to retire now, and I hit my goals, so I can go ahead and take profits. Now, obviously, if you need $3 million, you want to have like $3.5 or $4 million in your portfolio before you pull out that $3 million. Like, you don't want to just hit $3 million and just pull everything out, because if you do that, then what happens if the market goes up another 5x or 10x? then you're going to be in lots of pain of regret because you missed out on that move up. Okay, so don't do that. Make sure you have a little extra in the portfolio before you take out the full amount. Logical market signal number 2 is the angle of the market trend. We are looking for a 60 to 80 degree trend channel. The reason is because that signals the FOMO range or the FOMO area. This is the channel angle that shows amateurs are rushing in to buy. So usually when the amateurs start rushing in to buy, that's a signal for us to start getting out. Amateurs can be individuals or institutions. Sometimes you hear online that, oh, the institutions are doing this or the institutions are doing that. And we tend to think that the institutions are much smarter than we are, and because they have more money. Having more money does not equate to having more intelligence, or having more money does not equate to someone being able to take action quicker. Okay, so don't let the word institution fool you, because institutions are made up of people too. The institutions are made of humans. Sometimes you hear people say, oh, the institutions are coming. All right, well, to me, all that means is that a bunch of people are coming in. That's all it means. When you are looking for the 60 to 80 degree angle in the trends, guys, make sure that you use a arithmetic chart first, and then after that, switch to a logarithmic chart second and look at the angles of both trends in both types of charts. And use a daily or weekly chart to determine the trend of the channel. Do not use a smaller time frame chart. The logical market signal number 3 is the angle of the portfolio trend. I want you guys to look at a chart of your personal portfolio and then look at for the FOMO area or the angle of FOMO, which is the 60 to 80 degree trend. Okay, this is a channel angle that shows amateurs are buying. Okay, they're rushing in to buy, and that's when we want to sell. Amateurs can be individuals or institutions, like I said before. Institutions are made up of people too. Use an arithmetic chart first, and then use a logarithmic chart second, and then use a daily or weekly chart. As this trend channel here is going up in the green trend channel, notice how the channel was in gray before. The angle was about 10, 12, 15 degrees, and now it goes up to a higher angle, possibly 45 or maybe in 50 degrees. And notice at the top up there, there's 2 gaps. You will notice at the top red arrow, there's a gap down. So the highest green candle there, and then it closed with a green candle, and the next day there's a gap down, and then it closes down. So that first gap there shows that this trader took profits. And based on what I see there in the math, it looks like this trader took out $50,000 out of a $900,000 portfolio. This trader took out $50,000. And then if you notice at the second red arrow, there was a green arrow going up, and then there's a gap down the next day. So that gap seems to be the same distance as the first gap, so that would indicate that this trader took out $50,000 at the first gap at the top red arrow, and then this trader took out an additional $50,000 profit at the bottom red arrow at the second gap. This trader did the right thing and took out profits at the correct time before the market crashed back down. So that's really good trading right there. The logical market signal number 4 is the Bitcoin versus the USD charts. If our goal is to acquire more BTC, then use a BTC chart or the Satoshi chart. If our goal is to acquire more USD, then use a USD chart or a regular dollar chart. The Bitcoin chart itself is a market signal if our goal is to acquire more Bitcoins, right? That means that if our goal is to acquire more Bitcoins and the Bitcoin price chart or the Satoshi price chart signals us that it's the peak, then we need to go ahead and take profits then. Okay, even if the dollar amounts are not where we want it to be. Use an arithmetic chart for this, and make sure you use a daily and weekly chart like always so that you have more confidence in the data that you're looking at. When you look at this chart, you need to ask yourself some very specific questions so that you know which chart to use. If you want more USD, which chart should you use? The black and white candles is the price of Ethereum in US dollars. The chart in red and green is the price of Ethereum in Satoshis, in Bitcoin. If you want more Bitcoins, which chart should you use? If you're not clear, pause the video for a moment and take a look at it and look at the red arrows and where it's pointed to and where the peak is at, and ask yourself, where do you want to take profits at? If you want US dollars, which chart should you use and where should you take profits at? And then if you want more Satoshis or more Bitcoin, which chart should you use and where should you take profits at? So go ahead and pause the video just to look at that and then turn the video back on. So the answer is this, guys. If we look at this chart, you will notice that the peak of the dollar chart is in the black and white candles, and it happened in the middle of January 2018. That means that the peak is there. So that means that if I wanted to take profits and accumulate more US dollars, then it would be better if I use the black and white candles charts and take profits somewhere around the middle of January 2018 or the first 2 weeks of January. Now, if I wanted to take profits in Bitcoin, then I need to look at the red and green candlestick charts. And when I do that, I'm going to take profits in the last 2 weeks of January or the first few days of February. That's where I will get the most Bitcoins. The reason why is because at that time, the price of Bitcoin fell and the price of Ethereum was still going up. So you can get more Bitcoins for your ethers at that time back then. So be careful and be aware of what you want your profits to be in. So sometimes the signal for us to take profits is in these two charts right here. If we want more Bitcoins or if we want more US dollars, we have to look at that specific chart. And when we see that it's peaked out and starting to go down, then that's when we start taking profits at that time. The logical market signal number 5 is the trading volume. A large increase in volume can signal a trend change, but it's not always 100% true. Most of the volume are fake, so use the same volume source to have some consistency when you look at the data. For example, if you use the trading volume from your exchange, then continue to use it. For example, if I use the trading volume from Binance as my reference point, then continue using that in the future. If I use the coinmarketcap.com website for the trading volume data, then continue using that in the future. Do not switch it up because that would just create confusion. Trading volume from DeFi swap exchanges may not be included, so you may not fully see it. So for example, there are certain coins that trade a lot of volume on the swap exchanges on the DeFi market, but then when you look at on CoinMarketCap, you don't see it included on there. An increase is an increase even when it's fake. So even if they fake the volume, it's still an increase. Make sure you use an arithmetic chart, and again, use a daily and weekly charts because there's a higher degree of confidence in the data when you use a longer time frame chart. So if you look at the chart here, you notice that before the run up at the end of 2017 and the beginning of 2018, if you look at the solid green arrow there, you will see that the trend is going up at a 45-degree angle. But notice that before that happens, notice that the dotted trend line shows the top of the volume bars is trending up, is going up. So we can see that the volume is slightly starting to increase, and then after that, the market starts to increase as well. If you look at the February, March, and April time period, you will notice that the dotted trend line is starting to increase in volume. And then if you look on the candlestick chart, you'll start to see that the price is starting to go up at a 45-degree angle as well. So we can see here that the market increase or the price increase was preceded by a small increase in volume at the bottom. So that's a signal that we can use to let us know that the market is starting to go up and it may be starting to peak. The logical market signal number 6 is the market cap all-time high. Measure the high of the previous bull market to the low of the bear market. So if you look at the chart, we measure the top of the bull market at the red arrow in 2018 to the low, which is about 2019. So we draw a double-headed green arrow there, and then we copy and paste it to the top. Ideally, we want at least a 1x measured move above the previous bull market all-time high before we consider it as significant and consider it as a bull market signal. Use a daily arithmetic chart to find the first 1x measured move. So basically, guys, we take the first right here, and we take the high from 2017, 2018 bull market, and then we go down to the low, which is down here about 2019, and we draw the line here, and then this is one measured move from the high to the low, and then we put it on top up here, and now we have one measured move above the previous all-time high. And once the market gets above this point, so from here on up, that's when we will start considering planning to take profits. So when it's below this one measured move, then it's really not an ideal time to take profits. We want it above that. The logical market signal number 7 is to look at the Bitcoin dominance and when it crashes. So the Bitcoin dominance is the percent of the Bitcoin market cap divided by the total market cap of the entire cryptocurrency market. If you look at the in the red box there, it says the Bitcoin dominance low point from previous bull market in 2017, 2018 is right there, is right above 30%. It's probably around 32, 33, 34%, somewhere around there. So that's the low from the 2017 bull market. When I say take profits, I'm talking about taking up big chunks of profits when the Bitcoin dominance falls near that solid green line again. So when we see that history is repeating itself, then we will do the same thing as we did in 2017 and start taking out big chunks of profits. That's a very easy signal there to look at. There's not much explanation here. When it gets near the previous bull market's low, then we're going to take profits the same way we did in 2017. The logical market signal number 8 is the market ATR. The ATR is the average true range, and that is the distance from the high to the low of a candle period. So we want to use a daily ATR or higher and avoid using a lower time frame ATR. There are 3 types of average true ranges that we watch. The daily Taifu 30 cryptocurrency market index ATR, and then we look at the daily personal portfolio ATR, and then we look at the daily coin ATR. So look for the daily ATR to be significantly above average. And when I say above average, we're talking about a 1 to 3x gain in less than 30 days. We use a top-down ATR method, and I illustrate it in 2 different ways so it's easy for you to understand. If we look at the arrows that go from left to right, those arrows are called chevrons. And if we look at the chevron diagram there, it's the daily Taifu 30 cryptocurrency market index ATR. And after we look at that, then we look at the daily personal portfolio ATR, and then we look at the coin ATR. That's one way to look at it. Another way to look at it, which is the same meaning but a different visual representation of it, is to start from the top and look at the entire market, which is represented by the daily Taifu 30 cryptocurrency market index ATR. And after we look at that to see if it has made a 1 to 3x gain in less than 30 days, then we look at the daily personal portfolio ATR to see if it made a 1 to 3x gain in less than 30 days. And then we look at the daily coin ATR to see if it made a 1 to 3x gain in less than 30 days. And if all 3 levels of ATR have made a 1 to 3x gain in less than 30 days, that is a very strong signal that we need to sell a little bit and take profits. The first step in the top-down method is to look at the daily Taifu 30 cryptocurrency market index ATR. So if you notice that in the chart here on the right of the Taifu 30 cryptocurrency market index, you will notice that the ATR range is down here. So this first line is 50 points. So anything below that is 50. So anything in the middle should be around 25 points. So we can say that the ATR here was around 25 points. And then notice how it went up at this angle. Now it's up to about a 75 points. So 25 to 75 is a 2x gain. And if you notice when it gained like that, notice what happened to the market here. It started shooting up. If we were to take profits anywhere in here, we would not be wrong because this has gone up. But to make sure that we are looking at it accurately, we need to go and look at the daily personal portfolio ATR before we make a decision. In the daily personal portfolio ATR, we notice the same thing. Around this area, right down here, is 25,000 at the first grade line. In the middle of that would be around 12,500. So if it goes up to here, and it's almost touching the next grade line, which is 50,000. So if we go from 12,000 times 3 times 2 would be 24,000. So this is way beyond 24,000. Times 3 would be 36,000. So this is somewhere around a 3x gain. So we can see that represented up here. So that's good. We have basically a rough 2x gain in the ATR here. And then we have about a 3x gain in the daily personal portfolio ATR. So now let's take a look at the daily coin ATR. If we look at the daily coin ATR for the same time period, we can see that right here, it's about 0.10 cents. Right here is 0.5, half that's 0.5. So we go up to here, then it's 0.15. So that's a 2x gain right there. So we have a 2x gain here, 3x gain here, and a 2x gain here. That is a good signal to have when all 3 of these line up. And that's why we call it a top-down approach, because we're looking at the broad, big market. We look at our portfolio, and then we look at the coin inside our portfolio. So this is like trying to hit a target in a country, and then this is like zooming in on the city, and then on the streets to see where that target is at. Okay, so it's just zooming in closer and closer and closer. The reason why we want to zoom in closer and closer like that is so that we can be more accurate with our target of where we need to sell. Okay, let's look at several examples here. So like I said, guys, we want to look at the Taifu 30 cryptocurrency market index so we can see what the entire market's doing. And when we look at this, we can see that on April 15th, the average was about 75 points per day. That's how much it moves per day. And then by the time May 15th came around, it increased to over 150 points per day. So that means that's a 1x gain in the ATR right here. And now if we look at our portfolio to see what it's doing, we can see that on April 15th, the ATR was 41,000 ATR. That means that it moves up and down about an average of $41,000 a day in this portfolio. And then by May 15th, the portfolio volatility or the ATR has increased to 74,000, which is almost a 1x gain right there. And you can see that right here at this red arrow. Now down here on the daily coin ATR on April 15th, there's a 10 cent ATR, but by May 15th, it's now a 20 cent ATR, so that's a gain of 1x. And so because all this lines up to be 1x in the market, 1x gain in our portfolio, and then 1x in the coin, that's a good sign for us to take profits. So this is the reason why in this portfolio, if you see that's the good time to take profits on this coin. You would not be wrong if you took profits on it. Now, you also need to include the logical market signals and add up the points and see if it's ideal or not too. So this alone is not enough. Also notice the two downward gaps, which indicates the trader took profits right here, guys. I mentioned that earlier. See that gap up there? And it gapped down. It closed on top and then it gapped down right here. So that's like a $50,000 chunk of profits that this trader took out. And then a couple days later, the market closed here and then it gapped down, same distance. So that's another chunk. Look for this 1 to 3x gain in the ATR in less than 30 days. So there's 1x gain, 1x gain, 1x gain. A 1x gain in less than a week is extremely rare. Okay, that's extremely rare that will happen in less than a week. Usually it takes quite some time. So like from here, it went from the middle of April to the middle of May. And over here, same thing, middle of April all the way to almost at the end of May before it peaked. And the same thing here, right? It started going up in the beginning of May, and then it goes up there to the middle. But we can also say that it started in the middle of April as well, too. Logical market signal number 11 is the market ATR, and it's greater than 35 degrees. So the ATR is the average true range. The ATR is the average distance price travels from the period high to the period low over X period of time. So for example, 213.9816 equals the average points moved in one period. This is the ATR right here. This is how many points that the Taifu 30 cryptocurrency market index moves. This is over an average of 14 days. If you look at this and it's a weekly candle, that means that in each candle, when you measure it from the last 14 candles over here, if you take the last 14 candles over here and you measure the high to the low and you look at the distance of it and you average it out, it averages about 213 points per candle for the last 14 candles. When we see that increase in that, notice how down here, this is 100 points, so it's down here in the bottom quarter of this grid line. We can say that this is about 25 points, and then it increased all the way up here to about 250 points. So think about that, guys. That's a massive increase in ATR, but more importantly is the angle of the ATR. So look at the angle. Look at the angle of it. And down here, the angle was not very big, and then all of a sudden it goes into a 45-degree angle. Use an arithmetic chart and use a daily, weekly chart for this. We want to see the green arrows to be greater than 35-degree angles. Can it be 30? Yes. Can it be 45? Yes. 50, 60? Yes. As long as this angle is fairly high, that's a good signal. That's one of the signals that we use to let us know that we may potentially need to take profits. It's not the only signal, but if we combine that with other signals, then it's a really good confirmation. Again, we use a top-down approach, guys. So after we look at the big broad market index, then the next thing we need to do is look at the portfolio that we have and see if it's greater than 35-degree angle. If you notice, 7184 is the average true range for the last 14 candles. And if you notice over here, the angle here is way more than 35 degrees. So when you see something like this, it is an extremely strong signal to take profits. Extremely strong signal. And if you notice, the blue line that comes down, That's the peak. So really, you cannot wait for the ATR to reach its peak and come back down. As soon as we see that this is coming up about halfway or 2/3 of the way up, we need to start selling this, okay? Or we need to consider looking at other signals for confirmation so that we can start selling. The same thing goes here. If you look at where the blue line is at, it comes down. So basically, the time that we have to sell is within the first 50 to 60% range of that angle. Because once it goes higher, then we are going to miss out. We definitely don't want to be selling at the peak because it's already too late. That's when the price starts falling down. So we want to sell on this side of the mountain and not on the other side of the mountain. Logical market signal number 13 is the coin daily ATR. It needs to be greater than 35-degree angle. Like I said, guys, we use the top-down method. So we looked at the broad market using the Taifu 30 cryptocurrency market index. Then we look at our portfolio. And then now we look at the coin itself to see the angle. So in this one, the ATR is 42.6201. Average points moved in one period. And if we average out the last 14 periods, that's what it averages. 42.6 points or $42.6 in this case for Litecoin. Notice the angle, guys. Notice the angle. Notice that the blue vertical line when it comes down, if we want to sell this coin, we got to sell it before the ATR hits the peak and starts to roll over. Because when it starts to roll over, it's already too late. So usually the first 50, 60, 70% of the climb of the ATR here, the red line, that's the good time to sell. Again, this is not the only signal that we use. We have to use other signals to confirm what we're looking at. And once we have multiple signals and we have enough points to score it, then that's when we can use it. And same thing over here, guys. If you look at this vertical line, blue line comes down, we never want to sell at the peak of the ATR or on the right side of the mountain. We always want to sell on the left side of the ATR mountain over here. So here are some notes that I want to share with you guys about the market, the portfolio, and the coin ATR angles. Use a top-down approach to narrow your focus. The angles of all the ATRs do not have to be perfectly greater than or equal to 35 degrees. The more ATR angles you have that's greater than 35 degrees, the stronger the signal confirmation. That means that if we have a 40-degree angle here, a 30-degree angle here, and a 40-degree angle here, that's okay. If we have a 35, 35, 35, that's great. If we have a 40, 40, 40, that's great. If we have a 60, 60, 60-degree angle, that's great. But if we have a 60 and then we have a 30-degree angle here and a 60 here, that's also fine too. As long as you can clearly tell that the majority of it is 35 degrees or higher or close to it. So these are just guidelines. They don't have to be perfect numbers. Ideally, we want to sell while the ATR angle is increasing to 35 degrees. We want to avoid selling when the ATR angle starts to decrease. I mentioned that several times. We do not want to sell at the peak of the ATR or on the right side of the ATR. We want to sell on the left side before it reaches the peak. Use these ATR angles as guidelines only. They are not hard set rules. Okay, these are just guidelines, guys. Logical market signal number 14 is the USDT markup rate. Capital controls are countries where you need a government's permission to send a limited amount of money outside the country to a limited number of recipients. When I say government's permission, that means that you cannot send any kind of money outside the country without asking the government or the bank for their permission. And then you cannot unlimited amounts of money. You can only send a finite or limited amount of money according to the government, and you can only send it to a certain number of recipients. You can't send it to any random person that you want to. So any country that has these three issues is what we call capital controls. So capital controls creates an unnatural and artificial supply and demand in the markets. So for example, in Thailand and Vietnam, right, we have strong capital controls where people cannot randomly just send money outside the country. So because of that, they cannot send money to the outside world to buy crypto. They have to bring crypto into Vietnam, and then people buy it. And then when they do, they mark it up when they buy it, and they mark it up when they sell it. So the markup on the USDT was as high as 28% in the 2017-2018 bull market. The USDT markup rate in Southeast Asia is a highly accurate market signal for us to sell because it shows what people are willing to pay. For us, no market signal is more reliable and convincing than a person's willingness to pay. So at the peak in the 2017 bull market, around the beginning of 2018, the USDT was being sold for 28% higher, which means that if you wanted to buy one USDT, you had to pay $1.28 in Vietnamese dong or in Thai baht to get that 1 USDT. So think about that, guys. People are so panicking and so rushing in and so FOMOing to buy into the markets that they're willing to pay 28% markup for the USDT that's worth only $1. So they are paying $1.28 for something that's only worth $1. That happens very briefly, guys. It only happens for like 2 weeks and then it goes back down. However, when we see that going up to 10%, 15%, 20%, do we need to wait for it to go hit 28% for us to sell? No, we don't. Right now, our goal is to sell much lower than that. So let me explain that to you. The first thing that you need to do to calculate the USDT markup rate is to find out how much a US dollar is commonly sold for in the country, also known as the exchange rate, and then to find out how much a USDT is sold for in the same country. And then you calculate the difference between the price of the US dollar and the price of the USDT, or the stable coin, is sold for in that country. So here's the formula to calculate the USDT markup rate. The USDT markup rate is equal to the price of USDT minus the price of the US dollar divided by the price of the US dollar times 100. The markup is also known as a premium on Wall Street. So if you hear people talk about the USDT premium rate or the premium, what that means is it's the markup. So let's do an example of the Vietnamese dong so you guys know how to find the information online and then calculate the markup rate. So step one is find out how much a US dollar is commonly sold for in Vietnam. It's also known as the exchange rate. So in this example, we go to the Vietcom Bank, which is one of the government-owned banks in Vietnam, and you can look for it. It's just search for Vietcom Bank online and they'll tell you the website. And what you do is you go to the personal page there at the top, and it will say the exchange rates. And then you look at the exchange rates for that date, and it shows that the US dollar is being bought for $22,900 and then is being sold for $23,100. When you first look at this, it's going to be confusing because you're going to look at it and go, okay, which number should I look at? The lower number or the higher number? So you got to put yourself in the shoes of the bank. These numbers represent the amount that the bank will buy a US dollar from you, and it's the amount that the bank will sell a US dollar amount to you. I want you guys to put yourself in the bank's shoes. If you were the bank, when you buy the US dollar from a customer, do you want to buy it at a high rate or a high price, or do you want to buy it at a low rate or a low price? The bank is obviously going to want to buy it at a lower rate. So the rate that you are going to get is the lower one, which is the $22,900 and not the $23,100. If you own a US dollar and you want to sell it to Vietcom Bank, they will buy it from you at $22,900. They buy it from you, you sell it to them. If on the other hand, you change your mind and you want to buy the same US dollar back from them, guess what? They're going to sell it to you at $23,100. Their profit is the difference between the two. That's called the spread. So there's a 200 dong spread between $22,900 and $23,100. And that's the bank's profit. So every time you do an exchange rate, there's always a spread like that, and that's what the bank makes. In this example, we would sell the US dollar to the bank for $22,900. So keep that number in mind, 22,900 Vietnamese dong. In step two, we need to find out how much a USDT is sold for in the same country. So if we go to the Binance peer-to-peer exchange, we can see in this example that's highlighted in red that a USDT is being sold for 23,455 Vietnamese dong. The reason why we don't use the numbers at the top, so if you look at 23,460 at the top, and then 23,459, and then 23,458, 23,459, we look at all those and we see that this guy, Rich, he put the 5-star there. So it's not the exchange rating him that. So be aware of that, guys. Now, the golden check mark at the end is a Binance rating. It means that they are a verified vendor on there. So he's made 3,850 orders already. Just to be on the safe side, I'm going to go with the lower number here. The reason why I'm going with this lower number here is because it seems to be the average of the top 5, somewhere around there. It's close enough. It doesn't have to be perfect. When I take that 23,455 for a USDT, I'm going to subtract the cost, which is 22,900 VND for a US dollar, and I get the difference between me selling 1 USDT versus 1 USD is 555 VND, or Vietnamese dong. So we take the 555 Vietnamese dong and divide it by the 22,900 rate at Vietcom Bank. We get a 0.024, and we multiply that by 100. That means that there is a 2.42% markup on USDT in Vietnam right now. In step number 3, we can use the example here where 1 USDT is being sold for 25,350. So we do the same math again. We take the 25,350 and we deduct the 22,900 VND rate from Vietcombank, which is a government bank, and we get the difference of 2,450 Vietnamese dong. So the 2,450 Vietnamese dong divided by the 22,900 Vietnamese dong is equal to 0.107. And if we multiply that by 100, we get a 10.7% markup on USDT in Vietnamese dong. Now that we know that there is a 10.7% markup on USDT in Vietnamese dong, that is a really good signal for me to sell and take profits. Now, as always, guys, I do not use one signal only. I use multiple signals. And I'll talk about that when we talk about how to score these signals so that you know which ones are important and which ones are not. And then once we have the total score, then that will let us know when to take profits. Here's an example of the Thai baht and how to calculate the USDT markup in Thai baht. Step number one, as always, guys, we go to find out how much a US dollar is commonly sold for in Thailand, also known as the exchange rate. And we normally go to the most commonly used bank for that exchange rate. And in Thailand, the most common one that most people use is called Bangkok Bank. And if we look there, we can see that the Bangkok Bank has 32.28 baht for a US dollar, and they also have 33 baht for a US dollar. And as always, guys, if we are selling, that means the bank is buying. And when the bank is buying, they want to buy at a lower rate. So if you're confused or do not remember if the rate that we are selling, if we're going to get 32.28 or 33, then just remember, just ask yourself, if I'm selling, then the bank is buying. If the bank is buying, then do they want to buy at a lower rate or a higher rate? And the answer will be they always want to buy at a lower rate. So the rate that I'm going to get is 32.28 and not 33. In this example, the rate that we're looking at is 32.28. Step number two is to find out how much a USDT is sold for in the same country. So we go here to the Binance peer-to-peer exchange and we select the Thai baht, and make sure that when you do this, you select bank transfer. I would not recommend you guys use any other form of transfer because they have a lot of Africans that try to set up scams on this, and they do all kinds of credit cards and all kinds of scammy stuff. So just select bank transfer. So in this particular case, we see a 39.36, 32.79, 32.79, 32.78. So I'm going to choose a 32.78 as the markup rate for the USDT. So if we do the math, right, 1 USDT, we can sell it to these Thai traders and investors for 32.78. We take that, we deduct the 32.28 exchange rate from Bangkok Bank, and we get 0.50 Thai baht. We take the 0.50 divided by the 32.28 Bangkok Bank exchange rate, and we get a 0.015, multiply that by 100, and we get 1.15%. So right now, the markup for the USDT, according to this chart here, or this information here, is a 1.15% markup on USDT in Thai baht. Step number three, we look at what the Thai baht is going for when the market starts to go up. And we look here and we see that it has gone up to 34.10. That's the one that I'm going to choose for this example. If you want to choose 34.09, you can. The reason why I chose the 34.10 is because this trader, FIFA, has completed 3,113 orders, and the amount that he is willing to exchange is 13,000 USDT, which is a large volume on here. So I'm going to go with that. 34.10 minus the 32.28 Thai baht at Bangkok Bank exchange rate, and we get 1.82 Thai baht. We take that 1.82 Thai baht and divide it by 32.28 Thai baht, and we get a 0.057, and we multiply that by 100, and we get a 5.7% markup. So the markup on the Thai baht here in this scenario, or this example, is 5.7%. So we are looking for it to be above 10%, ideally, before we start taking out big chunks of profits. Again, guys, I do not use this markup rate as one signal to confirm that I need to sell and take profits. It's just one of the many signals that I use, and we'll go over that here shortly. So here is a chart that illustrates the ideal USDT markup rates to take profits on. In this example, I use in the blue text there the Vietcombank USD to Vietnamese dong exchange rate. And at this time that I made this video, it's $1 US equals 23,200 Vietnamese dong. So that's the first thing you need to establish whenever you create a chart like this. You need to establish what the standard rate is, and then you draw it right there like I did in blue. And then after that, you take that 23,200, you mark it up 5%, and you see where it goes. So the first solid red line above the dotted blue line is 24,360, and that's a 5% markup. I made a note there at the bottom where it says that greater than $3 million portfolio will start taking $50,000 to $200,000 chunks of profits per week when it hits 5%. Now, when the exchange rate goes up to 10%, like it did in April of 2021, when it's at a 10% markup, then the $1 million portfolios will start taking 10 to 20,000 chunks of profits out. And then at 15% markup, the accounts that are less than 300,000, they will start taking out $3,000 to $5,000 chunks of profits per week, with the 80% profit taking is done at this point for all the accounts. Now notice that at 5%, the multi-million-dollar accounts start taking out profits, and then at 10% markup, the million-dollar portfolios start taking profit, and then at the 15% markup, then the smaller $300,000 portfolios start taking profits. And then at 20% markup, ideally we want to be where we only have less than 10 to 20% of altcoins are left to sell, and that excludes Bitcoin. 28% was the all-time markup high in 2017, and 30% all-time high markup in 2021. In 2021, even though you see here in April, it only shows 10%, this chart is actually the chart of USDT, Binance, BNB on the Binance exchange. However, if we go to the peer-to-peer exchange, it was actually 30%. It was actually not 10 or 11% like it shows here in the chart. So that's why we have to look at multiple places, okay? Now, I don't use this that much because it's not as accurate as the peer-to-peer exchange. This is the guidelines that I want to set out. It doesn't have to be perfect, guys. If you have $1 million portfolio and you wait till 11 or 12% to sell, there's nothing wrong with that. If you have a $300,000 portfolio and you're good with computers and you say, hey, I'm going to wait until it goes up to 16, 17, 18% before I sell, there's nothing wrong with that too. And there's nothing wrong with if you have a multi-million-dollar portfolio and you want to wait until it goes up to like a 7, 8% markup before you start selling it. There's nothing wrong with that either. I'm just sharing this with you guys as a set of guidelines only. It's not hard set rules. It's not law in trading or anything like that. The reason why I focus on this, guys, and it's been very useful to me so far and my team and our students, is because nothing is a more accurate signal than someone paying for something. When someone's willing to pay a 15% markup on something that's only worth $1, that lets us know that the amateurs are starting to pour in. And usually when the amateurs pour in, we want to be going out. Okay, we don't want to hang around when all the amateurs are pouring in. Imagine something worth $1 and you're willing to pay 28 cents higher for it, or 30 cents more for that same. That does not make any sense, guys. That's very foolish. I would not do that. So I don't recommend other people do that. And when we see other people doing that, we need to take action and act accordingly, which means we need to start considering to sell. Now, this is logical market signal number 15. And this is the scam comments. There's an increase in scam comments when we are near the peak, guys, okay, or near an ideal area that we should sell. So the scam replies and comments will increase in popular YouTubers' comment sections in a bull market. Pay attention to the first day of comments and replies after your favorite YouTuber posts a new video. The methods to determine they are scammers, okay? They leave their phone numbers for you to call. They compliment an expert trader and encourage you to contact them. They impersonate a popular YouTuber, or they have no video uploads on their channel and they're making a bunch of comments. We get 2 to 3 scam comments during a bear market, and then we get about 20 to 30 scam comments per video during a bull market. If you just monitor the comment sections in our video channel and on the popular YouTubers channels, you will see that there's a certain amount of comments during a bear market, and then when the bull market comes, there's heavy increase in scam comments. For example, here, in the illustration on the right there, the first one where it says, why talk about the growth of BTC if there's NFT and the blank algorithm? So whenever they try to advertise their algorithm on my channel, that means that they are a scam comment. You go down to, not the second one, but the third comment, it says, so-and-so bring me 300% profit because of Tesla pump. So right there, they're trying to advertise. A trader paid them to put the comment there to advertise for their trading service. So that's why they do that. Look at the very bottom, guys. It says pinned by cryptocurrency market 4 hours ago. that is a fake account. I do not put all those icons at the bottom of my comments. I rarely comment in these things, and for sure I do not pin my comments, nor do I put those stupid icons, because I do not know how to even put those icons in there. And if you look on their channel, you will see that they have no videos on their channel. So even though it says cryptocurrency market, they use my picture, my profile, my face and everything, when you go to their channel, there's hardly any subscribers and there's no videos on their channel. So those are some of the ways that you can tell. So just make sure you guys monitor our comments section in the bear markets, and then monitor them in the bull markets, and you'll see what I'm talking about. That's a very good signal that we're near an area that we need to sell. This is not a very strong signal, but it's a good signal still. Logical market signal number 16 is the promotional emails. So social media influencers receive more scam promotional emails near the peak of a bull market or near an area where we need to sell and take profits. So to give you guys an idea, we get like 2 to 3 promotional emails per day during a bear market, and then we get about 10 to 20 promotional emails per day during a bull market. So the methods to determine that they are scammers is that when I read the emails, they guarantee me profits, or they are raising money without registering with the government and they want me to give them some money, or they say inaccurate things about our channel, like we think that NFT video you made was awesome and fits what we do, and it's not true because I have never made a NFT video up until that point. Or they will offer to pay us to say good things about them. If you notice here, here's an example of what my email inbox looks like, and you'll see that all those that I've read out are all spam emails in my inbox. Like I said, during the bear markets I would get 2 to 3 of those emails a day, and then during a bull market I would get about 10 to 20 of those a day. You will not know this one. This signal is something that only I would know, or somebody that has a channel or a business in the cryptocurrency space would know. But when that time comes, if you were to ask me, I would let you know. If you say, hey, Ty, have you had an increase in your scam promotional emails yet? And I can tell you, yeah, it's increasing or it's decreasing. Or no, it hasn't increased yet. That's one way. Or you can ask any of the crypto influencers and see if they will tell you. Again, this is a good signal for me, maybe not such a good signal for yourself, but you can ask me, and I'll let you know. This is a good signal, but it's not a strong signal. So when we go to score it, obviously this is not going to be a high scoring market signal. You guys have heard me talk about scoring the market signals, so we know what scores to have and what's important and what's not. So here is an example of the score sheet and the scoring method. So in the first column is the number of the signal, and then in the middle there is a type of logical market signal scoreboard. And so the first one is the personal financial goals. It requires a US dollar amount. So the Typhoo score for this would be 2 points. And let's say that I go to score this and I score 1 point on it. And then I go look at number 2, logical market signal, and it says it's the angle of market trend. Use the Typhoo 30 cryptocurrency market index. And I find out it's a good angle, right? It's 35 degrees or higher, so that's worth 1 point. And when I score it, it is 1 point because it is a 35-degree angle or higher. Then the third signal is the angle portfolio trend. Use your personal portfolio. The Typhoo maximum score is a 1. So when I look at my portfolio, I notice that it's more than a 35-degree angle, so I give it a 1. Now I look at the BTC versus the USD charts, and this is a very strong signal. So it's worth more because it's a more valuable signal. At the Typhoo score, give it 2 points. And then when you look at your portfolio, you notice that it hasn't done anything yet. We can't see any signals from that BTC USD charts, so it gets 0 points. So the My Score column is just an example of how I would score it, and then the Typhoo score is the standard by which we score it. It's the highest number of points that it can get. So we go down all this list, guys. It's not very difficult. You just go down each market signal, and you look at the Typhoo score, and you notice what we give it, and then you score it based on what we give it. So if it doesn't match the goals that we want, like we want a 35-degree angle, if it's not a 35-degree angle, then we don't give it 1 point. We just give it 0. If it's greater than 35 degrees, then we give it 1 point. After we do all this, you notice that the most important ones in here are the personal financial goals, the BTC versus USD charts, and number 14 signal, which is the USDT markup rate in Vietnam and Thailand. So those are the only ones that we give a 2 points to, because those are very strong signals to take profits. I did an example here where I scored it, and I came up with a total of 11 points. And the total that you can get at the moment is 19 points from the 16 signals that I shared with you guys. So there's 19 points total from the 16 signals, and I only scored mine at 11. So what does that mean? Do we take profits? Do we not take profits? Notice also in the 17th row where I put other signals. In the future, when we find additional signals, we'll let you guys know, and you just insert it at the bottom. We'll tell you what the signal is, and we'll tell you what the Taifu score is, and then you'll know how to score it from there.